Hello, ladies and gentlemen. Today we are taking a look at my Dividend Dentist portfolio. We're going to take a peek at seeing how it's been doing over the entire year. We're getting close to the end of the year, which we'll do a full update on how it's all performing. But right now, the market has been pretty hot. You can see right over here that our total on screen right now has been hitting a high of $427,767. And that's pretty wild, honestly. When we take a look at the gains just for the day, has been pretty massive. And I'll talk about which company that is right over there. And we're going to actually also break this down and see how the week has been. So it's been a really good week as well. You can see that we got about $10,860 in gains thus far. And we're going to kind of just break a little bit of this down. I've been talking about in previous videos which companies I've been buying, and one of those companies has been performing pretty well. So if you've been following along, you might already know which company that is. But just for those who are new to the channel, one thing I do always like to point out too, just because obviously that account is pretty large here. We started off this M1 Finance account at $100 back in January of 2019. And so I want to show people that it is possible to be investing consistently and growing. We started off with 100 and then we did $10 a week, then jumped it up to 20 once we felt a little bit more comfortable and so on. And then to a point where we started making more money from our income, we were able to start investing larger amounts, which honestly, I think if we hadn't started with just a smaller amount, we wouldn't be here today at this larger amount, because it does get a little weary having that much in your account, not to lie there. So if you are any chance curious about checking this out, M1 Finance, I will have a link for you in the show notes down below. That does help support me out, gives me opportunities, I should say, to make more content like this with my free time, as well as any other additional resources like my dividend tracker. If you want to keep track of all your dividend income, which actually, let me just switch over. This is that dividend tracker. So you can plug in all your numbers so you can see how your stuff has been growing over the year. So you could see back in 2019, our first payout was 2 cents, and well, don't look at that 400 because that's an estimate, but November of 2024, we hit $200.10. So it's just really fun to be able to keep track of that dividend income because I'm a huge fan. So again, those will be in the show notes down below for you to allow me to kind of just keep doing more of this fun stuff. So let's kind of break this down for the year. And obviously, like I said, we'll do a full year breakdown here very soon as well too. So for the year, we are sitting at $138,200. We have actually total dividends earned so far of $2,494.08. So we're doing pretty well. Obviously, even with this being called Dividend Dentist, for the dollar amount, I do realize that we're not making as much as we can be, but that's part of the goal here, is that we want to have this income focus for dividends later down the road, not necessarily today. So what we actually focus on are the companies that are increasing their dividends over time. And speaking of the company that has been performing really well over just this last week, they also do pay a dividend, and they're more of a recently newer fan or member of the Dividend Club. So that's going to be with Google right over here as I get this loaded up. So you can see over here, just in the last day, as of this recording, went up 5.46% just as the overall market. But you could see over here over the last week, we gained $7,560 from them. We actually just got our dividend ex-dividend date passed, so you can actually see how much we've earned. Hasn't paid out just yet, but it will this month. So that was $73.19. So it's really great. I've been buying over the last couple of months, even when I had slowed down, because I had mentioned that I slowed down on just investing as a whole, just because the market has gotten really hot. And usually the way I kind of roll with it is that when the market gets hot, I slow down, and when everybody's selling out of the market, that's usually when I buy more in. So I kind of do the opposite of, I think, traditional ways of investing for most people. So you can see right over here, just in the last 3 months, we've had a gain of $16,000 for this portfolio with just Google. If we go to our all-time, we've already made $210 through Google. So this is really cool because I do Google. I do work on Google, so I do YouTube content, not just this channel. I have the True Financials channel and a few others. So I actually get paid from YouTube, so to speak. And what's really fun is that I'm investing in a company that I'm, obviously participating in their ecosystem. And so getting paid out from that as well too is kind of like a really cool win. And you can see the market gains over here is $24,787 in my all time. Now, here's what's really cool too. I was thinking about this because I recently did have to sell a little bit of one company, which I talked a little bit about before, and I'll break that down on which company it was. And I'm not really a big fan of selling stocks, even when they go really high, especially if they're overvalued at that point, which is what happened with one of the companies. And this is another reason why I love dividends, because I have such a hard time selling the companies that I purchase, that when companies are paying out those dividends, I don't have to sell to get some of that value back over time. And like we talked about here too, because I focus on dividends for the future and not necessarily today, my excitement is that, with how much I'm getting paid from Google right now versus, in 10 years from now, it's going to be pretty amazing. So I'm going to go into Seeking Alpha, and we're going to go to the dividends over here. So the dividend yield is 0.43, which is not a lot. You can't really do much with that when it comes to the percentage compared to a lot of other stocks. But when you look at the payout ratio right over here, 5.31%, I mean, the averages, or like the golden standard, is 60%. So they're going to have so much room for growth over the years. And since they haven't even gotten a full year yet with dividends, I'm only expecting, double digits when it comes to those increases, whether it's 10, 15, maybe even 20%. Those are going to be really nice. And I'm also kind of curious if they're ever going to end up doing special dividends. Obviously, they just got started with them, so I'm not expecting any kind of special dividend, but like how Costco does that every couple of years after they amass quite a bit of extra funds, we could definitely see that as a possibility, and that would just be pretty incredible as well too. So I'll be looking at this over the years, and so if you're following along, if you're not already subscribed, make sure you do that. What we're going to do here is, check up on this every year when they do the announcements. I believe I have it in my dividend tracker. I have a little tab over here. So Google announced their first dividend back in April. So that's my estimated time of when they're going to do any kind of announcement when it comes to an increase. So I'll put that in here. And then if they ever do a special dividend, I'll put it in there as well too. So I keep this here just so that way, well, actually I'm a little zoomed out. So let me show you there. So see, I got Google, April is the estimated. And then since they've never done one yet, it's, NA right there for us. And so I'm excited. I'm excited to see that happen. And obviously, you can see there's a lot of companies here that actually do their dividend increases in February and April. So those months are going to be really fun. We'll make some videos talking about the companies we have. I just plugged in only the companies I have in my portfolio because those are the only ones I really care about the most. Obviously, I'll still pay attention to dividend increases or like news about them as well too. So yeah, this is looking really great over here. I'm honestly really happy with the performance. It's been on a lull for such a long time. You could see it hit a peak for a while and then it kind of slowed down. And we definitely were buying at that time. So if I go into my activities, go into like my morning trades. So these are the three companies I'm buying right now, I would say. Airbnb, VOOG, I know it's not a company, it's an ETF. And then VOOG for Google. So you could see over here, that was December 9th. That was at the 176. And like we showed earlier, it's at 196 as of this recording. And then, yeah, we were just doing that with all of these trades. So all of these had Google to some capacity right over here, just because that's honestly, with everything that was going on in the market, that was one of the very few companies that I was interested in continually buying into because the PE ratio was nice and everything else seemed a little overvalued in that respect. So obviously not that companies can't, match where their value is in the future, but at some point it starts becoming a little too rich for my taste at that point. And if I miss out a little bit on some growth because of that, that's obviously part of the space that we're in to be investing with. So that's kind of how we had to go with it. Now, I did mention that I did sell a little bit of one of my companies. So you could see over here, I did that on November 15th. So we did that with SoFi. Now I will admit, obviously, I sold it at a lower price than where it is at the highest points, which I think was somewhere around the $16 marker. It did get close back up to $16 as of this recording. So I did sell some of this to be able to actually do some other kind of investments with at the time. Obviously, in the future, I am intending to continue to buy more as I do believe in the company. I use them and I do talk about them on my channels as well too. So we'll see how that plays out. But like I was telling you, if they do pay out dividends in the future, it's going to be something where I can extract the value out of it without having to sell those companies, because even with that sale with SoFi, we still have 4,590 shares of the company. So down the road, we're going to have a really good opportunity to obviously earn some dividends without having to necessarily sell. You could see our average price was under 7. So we were looking pretty solid there. We were doing a lot of buys, especially on the way down for SoFi. And then for Google, we actually have about 366 shares at $129. So this one we were definitely buying when it was around $100 back in 2022, I believe it was. So overall, pretty solid as well. And you can see we're doing well with Amazon. Apple's been performing really well over the last couple of months as well too. And what's nice is if I go back to my actual overall holdings here, I can actually show with Apple when you include their dividends as well too. So we've earned about $325 in dividends. So our market gain is about $14,106 with them. So pretty great as well too. And obviously they pay a dividend, and we get to extract that value out without having to necessarily sell. Not that I am buying any more of Apple it's actually been a while. Let me see this. I actually haven't looked at this. So we're gonna look in real time and see when was the last time I bought Apple. It's been a while. And the reason you can tell that is because I've had 3 dividend activities before the last buy. So the last buy I had in Apple. And so this is just kind of giving you a little quick overview of this. This is how I want to show people that when I talk about, slowing down on purchasing companies because maybe the valuation, you could see that in my activities feed here. So with Apple, right here was May 2nd was the last time we bought at 171.61. Obviously, I thought at that point it was still a good price. And then after that, it started getting a little bit higher to the point where I had other opportunities in my portfolio to purchase, like SoFi and others, that I slowed down on that pretty significantly, honestly, seeing that. Let me bring that back up. That it's been since May, so 6-7 months at this point. It's been the case. But then if we go to, let me close this off. I like this right here. So you can see here with Google, these are all the buys, and you can see in December, November, October, September, a lot in September, actually, quite a bit, including the dividend. I most likely just popped that right back into the stock and some others. So we did quite a few buys. We even had a few that jumped up a little bit because I thought that price was just starting to get too ridiculous as far as a lower price. And so I just kept buying. What did I get this for? Yeah, 164. I dropped in a good amount there too. So I wanted to do that. And then the other thing, like I said, with SoFi, having sold that, in part when I was looking at the information from this. So we're on seekingalpha.com. Let me just make sure I zoom in a little bit here for you guys so you can see a little bit better. So here with SoFi, they're at 1594. So their PE ratio right now is at 100. Keeps getting in the way. 116. And if you actually go to their earnings, and then let's take a look here. So the estimated earnings. Now, don't get me wrong. I still believe that the company is going to do even better than these estimated earnings. Obviously, for 2025, it's estimated for 28 cents. I think it's going to do even better than that. But even so, at 28 cents of EPS, the forward PE ratio is going to be at 55 at that dollar amount. So what that tells me is that at this rate, at this price, it's not worth me buying more into so far, unless I see a lot of changes coming up based off of their earnings calls and their projections. Like we're going to be seeing what they are planning for 2025, and that can change things as far as pricing. Can I miss out? Possibly. But at the same time, I think based off of my current average price and the shares that I have of the company, I'm pretty happy with what I have of it. And I think that's something to be said when it comes to investing for yourself, or just kind of paying attention to these things. Is there's kind of a time to feel, the FOMO, right? Like I could feel FOMO for having sold when I did for, just the small portion of the shares that I had. But also at the same time, I felt like it was the right thing to do, because if this market kind of pulls back a little bit, I'll potentially buy some more in the future as well too. And if I missed out, that's okay, and I'll buy again. But I think I'll survive at this point from where I'm at. And honestly, I think based off of how we've been doing, this portfolio has been on a tear. So the last thing I'm going to show you really quick too here is that 1 year ago we were sitting at 240,000 in this account, and now we're sitting at that 427,000. Obviously, it would have been higher if I hadn't sold the SoFi, but that's okay. That's okay. That's the whole premise here of sharing this kind of stuff. But this is a pretty incredible thing to see in just a year's time, how much this has grown. And that's honestly from staying consistent, buying the companies in my portfolio that are a little under the weather, so to speak, when it came to their price point, because maybe people were not believing in the system of where those companies were going, or for whatever reason, even with Google, I know with the lawsuits and everything else, people were kind of a little fearful. But my thought process during that time was, And obviously the lawsuit's still ongoing. But my premise on that was, well, Microsoft had a lot of, run-ins with, the monopoly lawsuit kind of stuff, and they ended up still doing very well, right? So if you look at Microsoft, let's go, I mean, even during that time with that lawsuit, I forgot what year it was. It's like 2002, 2003 maybe. I mean, you're sitting really pretty if you were still investing in that company at the time. So, it's kind of one of those things you obviously don't know for sure on any one way, but that's why it's great to diversify. We have 13 holdings in this portfolio, plus one of them is an ETF. So we are pretty well rounded, I would say, here with the different kind of stocks, the different companies we're in. Obviously, it's a little bit more tech heavy, a little bit more banking, because I kind of play in that space with my tutorials and tools. So I'm pretty aware of a lot of these companies and what they're doing all the time. But nonetheless, looks like it's going pretty well. We'll do a year-end follow-up with obviously the dividends that we get paid out for this year. I put the estimates, so it's looking like it's probably going to be $400 and something here. I think, what is that? Yeah, $442 is the estimate. But keep in mind, some companies I've been buying a little bit more before that estimate came through, so might be a little bit higher, and then we'll calculate the full year end and everything else as well too. So make sure you stick around. Like I mentioned earlier too, I will have all the resources for you in the show notes down below, including purchasing, if you want to, the dividend tracker, or testing out M1 Finance to build out your portfolio. All that will be in the show notes for you and helps support out the channel. And until you come back to the next new video, I'll post another video right over here for you on screen so you can keep on learning with this account.